Okay, in this video, I'm going to go through the answer to the question number 4 in chapter 5 quiz. Okay, so first I'm going to read this question. So in this question, okay. So Cameron Motorcycles sold 800,000 receivables to a factor to increase the company's liquidity. The company chose to factor these receivables without recourse, okay, without recourse. In exchange for these receivables, the factor paid the company, okay, $720,000. On the date of transfer, ultimately the factor collected $780,000 from these receivables. Requirement: record entry on this company's book relating to the 800,000 accounts receivable. Okay, so remember, okay, there are two types of transfer. When you transfer to a factor AR, there are two types: with recourse versus without recourse. Right? So for with recourse, without recourse, okay. For without recourse, what happened is, if there's without recourse, okay, that means if the factor cannot successfully collect the AR, they will not come back to you, right? So in that case, on the date of the transfer, you are actually sales of AR. So this is considered as the sales of AR. That's very important. If with recourse, okay, with recourse, that's just a short-term liability. Without recourse, it's the sales of AR, okay? Okay, so if you sell of AR, so your AR balance should be 0. Okay, your AR balance should be 0 after the transaction, right? Should be 0. Okay, so right now, your AR balance, AR balance is 800,000. To make your AR balance 0, you need remove accounts receivable for $800,000. Okay, so you credit AR. Okay, this is the sales of AR. And then how much cash did you receive? Okay, in this question, I think, let me see, how much cash did you receive? Here, okay, we received 720,000, okay? Okay, so you receive cash for 720,000. This is a very easy journal entry. You debit the cash for 720,000, okay? So you credit AR for 800,000, you debit cash for 720,000. The difference is a debit of 80,000. So through this transaction, you are able to get your cash earlier, right? Instead of waiting for a long period of time, collecting all the $800,000, you get all this in one time, 720,000 in cash, okay? But you are willing to take only 720 instead of 800 because of what? Because you trade off between the future cash flows versus the current cash flows, right? So you are using the money right now, okay? So you have interest expenses of 80,000. Okay. The fact that, you know, this $800,000 will not be available right now, right, at the present. It's a future cash flows, right? But this 700,000, that's the present cash flow, okay? So then the difference is due to the interest expenses. The difference is due to the interest expenses. And then some students may ask, well, ultimately the factor collected $780,000 from receivables. How should we deal with this? Well, you sold this AR to the factor, okay? The AR is not your business anymore after the transfer, right? Now the AR belongs to the factor, okay? So if how much they can collect, that's their problems, not your problem, because you have already sold your AR, okay? So I hope this makes sense. Yeah, that's the question 4 in chapter 5 quiz. Have a nice day.